The Seed Enterprise Investment Scheme, SEIS for short, is a way for experienced investors to invest in small, young companies and receive very generous tax relief. The companies in question are very early stage. They must be less than 3 years from the start of trading and can have no more than 25 employees and £350,000 in gross assets. You can invest in a single company or in an SEIS fund, which is a portfolio selected and managed by a venture capital firm. Technology is one of the more common areas for SEIS, as these companies often aren't capital intensive. But you also get businesses in other areas, for example, life sciences or consumer goods. One example of an SEIS-backed company is Cognism. It provides an intelligent database of sales leads for businesses.
Cognism, emails and phone numbers for your most relevant prospects. Get access to better quality data and help make your sales team's outreach more efficient.
The platform has information on millions of business contacts worldwide. It uses artificial intelligence to give prompts and suggestions for salespeople. For example, when best to get in touch and how to personalize a message. Cognism was backed in 2017 through the Startup Funding Club SEIS fund. At the time, the company was pre-revenue. Within 3 years, it had announced it had reached $10 million in annual recurring revenue. In March 2020, early SEIS investors had an opportunity to exit. Of course, not all SEIS investments go on to be successful, and failures are common. That's why the government provides such generous tax relief for investors, which can help cushion any losses and amplify returns. So what are the SEIS tax reliefs and how do they work? The first is income tax relief. When you invest in an SEIS qualifying company, you get income tax relief of up to 50%, provided you hold the shares for at least 3 years. Invest £10,000, for example, and you will receive £5,000 back, assuming you have paid or are due to pay sufficient tax in that tax year. Second, any profit made when you exit your SEIS investment is free from capital gains tax. Third, SEIS investments allow you to wipe out half of any existing capital gains tax liability. For example, suppose you had a capital gain of £100,000 from shares, and therefore a capital gains tax bill of £20,000 this year. If you invest £100,000 under SEIS, you could wipe out £10,000 of that CGT bill. In this example, a £100,000 investment in an SEIS qualifying company could save you £60,000 in tax when adding the income tax relief to the tax saved by halving the capital gain. The maximum you can invest in SEIS in one tax year is £200,000. So what happens if you lose money? Well, with SEIS, you get tax relief not only on the way in, but also if you lose money. You can write off any losses against an income tax bill. This means if everything went wrong for an SEIS investor who had claimed all the tax reliefs and they lost their whole investment, the actual loss to a 45% taxpayer would effectively be just 17.5 pence for every pound invested. The final tax relief is potential freedom from inheritance tax. As long as the investment is held for at least 2 years and at the point of death and remains SEIS qualifying, you can pass it on to your heirs and potentially save a 40% inheritance tax bill. However, SEIS investments are by their nature very risky. You are, after all, investing in very small startup companies, and you should expect some to fail. That's why SEIS is only for experienced investors. You could lose your capital, and you should not invest money you cannot afford to lose. A professional manager can help navigate that risk, and if you invest in an SEIS fund rather than a single company, you can get some diversification. You should still be prepared for the whole portfolio to fail, however. The investments will be illiquid. You can't usually sell them in the way you would sell a quoted share. Typically, you'll be waiting for the fund manager or the entrepreneur to arrange an exit, such as a trade sale or an IPO. And finally, to keep the tax benefits, you need to hold your SEIS shares for at least 3 years. Remember, tax rules can change and the value of benefits depends on circumstances. If you're unsure, you should seek professional advice. For more information about SEIS investments, please take a look at the Wealth Club website.